Roger, given this is the first time on the show, I wonder if you wouldn't mind starting. Just give us a little bit about information about your background and why you're qualified to talk about all the things we're going to talk about today.
Well, I don't know if I'm qualified, but I am a geopolitical and geoeconomics expert and money expert. Those are the things that I talk about. And a broadcaster, and I do a lot of television and radio in the UK, a bit in Australia, South Africa, and particularly in the States, where I report on goings-on on this side of the pond for them. And vice versa.
Well, thank you for joining me on the show. Now, Roger, let's start with news from the US yesterday. We heard Jerome Powell, the head of the Federal Reserve last night, say that the US is almost ready to start cutting rates. What do you think? There's a few issues I want to talk about here. Firstly, I guess, do we think that the UK will follow suit? I mean, this is usually what happens when the US moves economically. But also we've got, huge bubbles in our stock markets, in a lot of asset classes at the moment. My thoughts are, what's going to happen if they start cutting rates and they pivot? Because, that's going to fuel that fire that we're already seeing. So what are your thoughts on all of this, Roger?
Well, firstly, I don't think it's going to fuel a fire. I think it's going to take this government, this high taxation government, and the probably even higher taxation Labour opposition, and the Bank of England's foot off of our throats in this dreadful cost of living crisis. I think quite the opposite. I think the Bank of England needs to begin lowering interest rates immediately, and stubborn Andrew Bailey, the Bailey-oceros, as I call him, and his thick-skinned colleagues who won't listen to anyone who disagrees with them, are further destroying the British economy. They have already wrecked the mortgage, the property, the rental market, the bank of mom and dad, and probably kept a whole generation of young people off the property ladder. Now, I've been advocating for over a year and a half, since the first interest rate hike, that Mr. Bailey, as he is alleged to have done at the Financial Conduct Authority, has made humongous billion-pound mistakes in raising interest rates. To raise the rates 14 times and put us in a crushing position. Pardon me. And by the way, when people say, "Oh, 5.25%," that's not so much. I can remember when it was 14% back in the 80s and the 90s. Well, read the reports of the Leeds Building Society and others that will explain that with all the changed fundamentals in salaries, in house prices, in just basic economics, a 6% mortgage rate today, James, is the equivalent of a 25% mortgage rate in the 1980s. So this is expensive money we've got. Raising those 14 rates was absolutely wrong, the stupidest thing to do. How many football managers would be allowed on the pitch after 14 losses with the same playbook? Those raises did nothing to combat inflation. Inflation has fallen, but that is because we have what's called cost push inflation. In other words, non-consumer driven inflation. People are worried about heating and eating. We aren't spending money extravagantly. The inflation is coming from food and energy prices, materials and services, things that you and I cannot control. So burdening us with more debt is about the most idiotic thing that you can do. But it's not unusual for Mr. Bailey to do things like this and then stubbornly stick to them. He does tend to slavishly follow the United States, which is also a huge mistake because they don't have cost push inflation. They have what's called demand pull inflation. They have consumer spending getting out of hand. They have $1.7 trillion of money underneath their mattresses that was saved up during the pandemic, which they're now spending with alacrity. They also have their own energy supply, unlike us. And therefore, it's a totally different situation. When they raised interest rates, inflation dropped overnight like a rock by more than half. Here, it happened 14 times and it didn't drop at all. It's only recently that it has started to come down. Final point. Mr. Bailey and his colleagues on the Monetary Policy Committee, with their groupthink and allowing nobody like crazy people like me with different ideas to influence them, have actually prolonged and increased our inflation from the time when it would normally drop. Cost push always falls by itself. Going back to when wheat started to grow again in ancient biblical Egypt, in 2009, we had cost push, and the Bank of England didn't touch interest rates for 3 years. So it's not fuel on the fire, my friend. It's anything but. It's water on the fire.
And what do you think about just kind of about the political situation between the UK government and the bank? Of course, the Bank of England is supposed to be independent, but we've heard Rishi Sunak and the Chancellor and other Conservative politicians quite frequently talking recently about the fact that they've got inflation down through their, when actually it's the Bank of England that's responsible for getting inflation down. What do you make of that? I mean, do you think there has been political pressure potentially on the bank to act the way it has?
Well, no, I'm so sorry, but you're completely wrong, I have to say. I'm sorry to be so frank. The Bank of England, as I've just been explaining, did not get inflation down. They actually raised and prolonged the cost push inflation. They made things more expensive. They had a great influence in pushing wages up to meet the cost of living crisis by their 14 ridiculous, unnecessary interest rate rises. Let me just make my answer.
Yeah, of course, yeah.
The Bank of England had nothing to do. A year and a half ago, when I said, oh my goodness, you've just started interest rate hikes, that's the wrong thing to do just because the States is doing it. Please don't do anymore. I also predicted that they would, of course, claim credit when it did start to fall by itself. Now, Rishi Sunak and Jeremy Hunt, shame on them, have stood by and let Bailey do this. They haven't really opposed him at all. The Lords Select Committee on Treasury Matters did, however, a couple of months ago come out, criticize the Bank of England for its forecasting, criticize the Bank of England for the appalling way that it handled inflation very badly, and said that the powers that Gordon Brown gave them in 1997 to be so independent and untouchable should be reversed.
Yeah, I mean, I absolutely accept your point that it's actually the Bank of England that have not been responsible for inflation coming down. I think the point I was trying to make is, do you think the Bank of England has behaved as it has because of the messaging from Downing Street? Because, of course, the Chancellor and the Prime Minister have both talked about the need for interest rates to stay high. Do you think that the Bank of England's behaviour on that has been influenced by our politicians when it's actually supposed to be independent?
Well, I mean, it's probably been influenced to a certain extent, but I mean, Jeremy Hunt, I mean, how could you walk into a bank with a CV which shows not 24 hours experience in your life ever working in any kind of a financial business, anything to do with money, finance, or banking, and expect to get a job? But you can stroll down Whitehall and be given this country's finances to run. That's Jeremy Hunt. It's unbelievable. Rishi, who worked at Goldman Sachs as a trader, he ought to know better. The two of them have just let Bailey get on with this when they should have used their influence to stop him.
Yeah, no, absolutely. It's a very, very good point. And it's not just, the Chancellor, it's the Health Secretary. We end up with people who've got no background in health end up running that department. It is absolutely ridiculous.
How did that work out for us?
Yes. Yeah, exactly. Very, very good question. Roger, we're just going to go for some news headlines very quickly. Stay put. After the break, I'd like to talk about the fact that trading was stopped on two US banks this week. Obviously a year ago we had the Silicon Valley Bank failed. There are suggestions now coming out this week that we're not out of that issue yet, and we might be seeing a new financial banking crisis in the US. I'd like to ask you how worried you are about that and the possibility of it spreading across the shores here to the UK. So stay put, Roger. Don't go anywhere. Stay with us right here on TNT.
TNTRadio.live.
This station, the first to broadcast.
Breaking news. TNT Radio News.
Matt Boyland here with a look at your TNT headlines. We're still no closer to a ceasefire in Gaza, with negotiations to secure a 40-day truce before Ramadan appearing to break down in Cairo. The US
this week, there are some that are saying that
Today's News Talk, TNT Radio.
Right, so Roger, as I said, there's been the trading was stopped on two US banks this week. There are some that are saying that the reason Jerome Powell has suggested that the US is nearly ready to cut rates is actually because of this situation with the banks. How worried are you about this situation in the US?
I'm not terribly worried, but of course the interest rate rises have been a burden on businesses in the U.S. The overall instability, uncertainty of the political situation is not helping. But I don't see a spread. I don't see a banking crisis, a financial crisis, a credit crunch as they had in 2008. I don't see that looming. I think that Silicon Valley, they overextended themselves. This happens regularly with banks, especially American banks. They're very assertive. They see an opportunity. They take on too much in a particular market. They don't diversify enough. There may be some more problems for some, but I still feel that most of the big American banks are pretty solid.
Okay, and just to finish off, in the UK here, obviously, a lot of people are very, very welcoming of a rate cut. I think it's 1.6 million households this year will come to the end of their current fixed rate deals. How pressed do you think, particularly the middle classes, are at the moment in terms of their finances?
Horribly pressed. First of all, it's the same old story. It's rip off Britain, isn't it? Most of the world, you get a 30-year fixed rate mortgage. We don't worry about this kind of nonsense, but it's the greedy banks and the government and the regulators like Mr. Bailey, that like the Treasury, that go along with them and let them play this game where even a fixed rate mortgage is only for 3 years or 5 years. In America, you buy a house. If the guy who owns the house has got a particularly good mortgage deal and you would qualify for a mortgage at his lender, he can even pass you his mortgage to take over at a lower than market rate and increase the price of the house. It's just standard stuff. There's no explanation, no reason for why we're not doing it. So I think that times are going to be tough until they start to bring rates down. And when they do, by the way, there's no guarantee that the mortgage lenders will also bring their rates down any more than there's a guarantee that when rates go up, as they have, that they're going to pass on a fair proportion of that to people with savings. And remember, James, there are 7 times more savers than there are people with mortgages. So everybody is getting, a pretty raw deal from the financial sector, and this government is supporting it. It's the highest tax government there is. I also want to say something that I've been talking about everywhere. We really expected some honest tax cuts in the budget. I didn't. I'm cynical. I knew we wouldn't get them. The net effect, Sunak and Hunt are crowing about the tax cuts they've given us once again, as they did in the autumn statement. But just as then, we're actually paying more tax because they haven't moved the tax threshold. So the truth is that somebody on £17,000 a year is actually, as of Wednesday, paying £47.29 more per month in tax than he was on Tuesday. That's the net effect of this wonderful budget that these great guys are crowing about that they've given us. Why haven't they made real tax cuts? Because we're broke. The OBR, the Office of Budget Responsibility, which the political editor of the Times has identified as a bunch of lefty economists, they say we don't have a lot of money. Well, the truth is, and this was exposed recently by Richard Tice, the leader of the Reform Party, and backed up by a number of leading economists, we are paying 40 billion pounds to ourselves from one pocket to another with the interest that the government is paying on the quantitative easing, the printed money, the hundreds and hundreds of billions of money they printed and dumped into the economy, which also fueled inflation. We're paying interest on that of 40 billion a year. Switzerland doesn't pay any interest. The European Central Bank doesn't pay any interest. All kinds of other countries don't engage and indulge in this ridiculous fantasy of paying interest from one pocket to another. But our government is counting that as a real debt of ours and saying, therefore, we don't have enough money. Well, hey, what do you think? Take a guess. I'll give you one guess. What is the cost of moving the tax threshold from £12,570 to £20,000, thus protecting pensioners and lower earners, the people the Tories don't really care about because they're not going to vote for them anyway? How much do you think that will cost per year? 40 billion.
40 billion. Yeah, absolutely.
So,
I know that this is one of the policies which I do love about Reform UK. But listen, Roger, we have run out of time. Thank you so much for that absolutely fantastic insight there. We'll have to get you back on the Freeman Report at some point. I've been talking about the problem with fiscal drag all week. The government gives with one hand and it takes silently and stealthily with the other. Yeah.
They're now calling Jezza the fiscal drag queen.
Brilliant. I haven't heard that before. That is absolutely brilliant. Roger Gewald, thank you so much for coming on. We'll get you back on soon. Thank you, Roger.